I'm Angeline and welcome to Beat the Street, the show that gives you the tradable news and data you need ahead of the open. Coming up, rate cut hopes fade. US stocks look set to slip as investors continue to clip rate cut expectations. Home Depot sees weak demand affecting its 2024 results. And Walmart shines. It's raised its dividend. It has an upbeat outlook and it's set to acquire Vizio for $2.3 billion. Now, more on that in just a moment, but not long now before Wall Street starts trading, especially with everyone coming back from that long holiday weekend. This is how we're looking at the moment, and it's looking extremely cautious, giving you the 15-minute view here, if I may, because that will give you a better indication of what's been happening since you've been away enjoying that long weekend, if you're watching in the States or if you are someone that trades US financial instruments. And as you can see here, we're seeing a channel at the moment between 38,453 and around 38,523, and struggling to break out of the trend line, the 50-day moving average trend line. However, if you look at the other indices, you'll see a similar picture as well. It's like the markets are just waiting, biding their time, really ahead of the big event this week, which is earnings from Nvidia. And what's also interesting is that really the earnings from Nvidia seen as almost now as a bellwether of how indices might react. Let's just have a look at some earnings that are already out, starting with Walmart. Walmart saying that its 2025 sales came in largely above Wall Street expectations. It also raised its annual dividend by 9% and says it will buy smart TV maker Vizio for $2.3 billion. Now, Walmart says it will offer $11.50 for each Vizio share. That's a premium of 20.7% to Vizio's last close of $9.53. Let's start off with Walmart's shares first, because it is all sessions, and this is the 15-minute chart. As you can see there, quite a reaction. Investors there loving the dividend news and also the outlook. Let's just give you an hourly chart to show you what's happening there. And this is the daily view, all sessions. Walmart currently up 3.7%. But let's check in to see whether we can draw you a chart of Vizio. This is the smart TV maker, which you can also trade when the cash open starts, but it's available on the platform, but not as an all session stock. Moving on to Home Depot. Home Depot's full year results, though, coming in below analyst estimates. Transactions fell an 11th straight quarter as consumers continue to hold back on spending on home improvement as a prolonged cost of living crisis starts to bite. Home Depot says it expects comparable sales to drop around 1% for fiscal 2024, as it expects people to continue to hold back when it comes to discretionary spending, such as expensive kitchen and furniture spending. Let's take a look at Home Depot shares, if we may, because it is all sessions, and Home Depot shares not faring too well after its results, down 1.74%. But you can really see the reaction on the 15-minute chart there. There you go. What a reaction to the shares there. Home Depot's comparable sales falling 3.5% in Q4, compared with a 3.3% expected drop. So also on that front, it disappointed. Right now, Home Depot shares, all sessions, down 1.7%. Now, as we talk about these two stocks, it's important to note, as I mentioned earlier, the big elephant in the room, or the monster in the room in terms of earnings, is Nvidia. Nvidia reports after the close on Wednesday. The street anticipating earnings per share of $4.58 and revenues of $20.4 billion rather. Revenues of $20.4 billion for the same quarter last year. Nvidia posted earnings of 88 cents per share, and this is on revenues of just over $6 billion. Let me just pull up Nvidia's chart for you, because Nvidia's shares in terms of the rise, well, nothing short of phenomenal, really. If you thought that it did really well in 2023, well, in the last 12 months, it has translated into gains of 220%. And year to date in 2024, the stock has already risen by a whopping 50%. Now, if you look at the technical indicators, just showing you a line, if I can go further back to the October 2023, when we saw much of the move on all the indices as well. If you draw it, let's say from around there, you can see that it's just gone off the charts. I mean, that is quite an impressive rise there. I mean, looking at the moving averages will tell you what sort of gains this stock has made just in the last 12 months. The development of AI means that businesses around the world have the opportunity to operate more efficiently and improve their market positions. And Nvidia has actually rode this wave because its products are now seen as essential to achieve these objectives. Nvidia's data center business, which comprises cloud and AI services, could see its revenue come close to $17 billion, more than 4 times the amount reported a year ago. Also fueling this rise, financial institutions like Goldman Sachs and Bank of America have issued bullish price target upgrades, injecting a fresh wave of optimism amongst investors. But do remember, we've got seeping in now after earnings and comments from the likes of Microsoft that investors are becoming more focused on the cost of AI recently rather than the future benefits. Now, also checking in on the currency markets, because we are looking at the dollar versus the yuan after China grabbed trade attention early in the day after a big cut to its benchmark reference rate for mortgages. Dan Wang, chief economist at Hang Seng Bank China, says this is great news. He says it's a necessary first step to alleviate China's debt burden, stimulate long-term investment, and bolster stock market confidence. And what we also have to remember is that we've got the FOMC minutes later on in the week. So pay attention to what this suggests about the dialing back or the expectations of a rate cut and the timing of that, because all this will also feed into the forex markets if you're an FX trader. Now, before we go, a quick look at the currency markets to see where we stand after those earnings out already. As I said, we're still waiting on Nvidia. Still looking like a really cautious start. Let's check in on the 15-minute chart for you, because traders out there might be sort of sitting on the benches, wait and see stance ahead of Nvidia's numbers and also ahead of that FOMC minutes coming out later in the week. Perhaps we might see another breakthrough of the resistance points once we get Nvidia's numbers, but at the moment we're pretty much trading in a sideways trend. And that's the latest from me. Thanks for watching Beat the Street. For more analysis, do tune in to @Angeline on Twitter or @IGCon, or certainly check our website for more. This is IGTV.